Hey everyone, we had some massive news for Apple stock investors today that surprisingly only sent the stock down by 2%, which was interesting considering that the market was down roughly the same amount. So in this video, I'll go over the latest news and what it could mean for Apple stock investors in this video. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the big news that came out, according to market intelligence firm IDC, Apple's first quarter shipments of iPhones fell 9.6% year over year, down from 55.4 million units in the first quarter of 2023 to just 50.1 million units in the first quarter of this year. Or in other words, a decline of 5.3 million units year over year. The company's market share overall fell from 20.7% to 17.3%. That's a big move downward in market share for Apple. Now, this news only sent the stock price down roughly 2%. Like I mentioned, Apple's stock price was down 2.24%. And you could see I have it here along with the S&P 500, which is down 2.17% today. So it was down pretty much with the market, nothing extra, which is surprising because the iPhone is such a big deal for Apple. If shipments are down by this much year over year, shouldn't the stock price be down more than what it was? I would think so. So that was a bit surprising to me. Now, to make matters worse, the overall worldwide shipments of phones were up year over year. So total worldwide smartphone shipments increased to 289.4 million units in the first quarter of 2024, up from 268.4 million units in the first quarter of 2023. Again, this is according to IDC. So worldwide shipments of smartphones increased by 21 million units, but iPhones decreased by 5 million units. So the industry is growing and iPhone is going backwards. That was surprising and unfortunate for Apple in its market. Now, one of the reasons for this is because rivals in China are growing and taking market share with their lower priced offerings that are arguably just as high tech as Apple's iPhones, but offer a better price. And on top of that, the geopolitical tension and the government in China encouraging or discouraging people from purchasing iPhones. So while Apple is still the second largest smartphone maker in the world by shipment behind Samsung, Chinese firms like Xiaomi, I hope I pronounced that right, and Transition are gaining momentum in the market. Xiaomi saw shipments rise 33% in the quarter to 40.8 million units, while Transition saw 84.9% increase. So these rivals are gaining rapidly while Apple is going backwards, and they seem to be gaining at Apple's expense. Now, the iPhone hasn't really had very much improvement over the last several years. It's been mostly incremental improvements, and especially in artificial intelligence, the phone seems incredibly lacking. So it's due for a nice upgrade here. Infusing the phone with AI could be the big jump forward that iPhone needs here in 2024 to give it back its dominance. Although, I don't know, the company, while those incremental improvements have been enough to keep Apple up there, they haven't been enough for it to gain market share, and it's given an opening to rivals to come in and take some share away from Apple. Hopefully, this puts some emphasis towards Apple's management to really make some improvements on the iPhone and not just incrementally make the camera a little bit better, make the battery last a little bit longer. Those small upgrades have been enough when your rivals have been really behind, but it gives them an opportunity to jump in, create their own innovation, and then jump ahead of you, which seems to be what's happening. If Apple's not careful, it can continue losing market share meaningfully here. And the iPhone is a very important part of Apple's business. I could show you here its net sales by category. I have here highlighted iPhone, Mac, iPad, and the wearables and services segment, the iPhone was 69.7 billion out of 119 billion in total net sales in Apple's most recent quarter. So more than 50%, more than 60% of Apple's sales are coming from the iPhone. What's more is I would argue the rest of those sales are also dependent on the iPhone. For instance, services are a $23 billion business for Apple, but would you buy Apple services if you don't already own an iPhone? Think about that. Would you subscribe to Apple Music? Would you subscribe to Apple TV Plus if you didn't already have an iPhone? Or maybe you would, but maybe not as many people would. Or you definitely wouldn't buy Apple Care, right? You wouldn't buy protection for your iPhone if you don't have an iPhone. So I would argue that the iPhone is even more important than what is apparent here. If you just take iPhone sales and divide it by total net sales, I would argue that Apple is even more, the iPhone is even more valuable. And don't get me started with wearables. Would you have an Apple Watch if you didn't have an iPhone? Would you buy the AirPods if you didn't have an iPhone? And so the iPhone is critical to getting people into the ecosystem. And if iPhone unit sales are down, that's a really big deal. And to reiterate my point at the beginning of the video, I'm surprised Apple stock is only down 2% on the news. I'm surprised Apple stock is only down 2% on this news. Now, again, this highlights the trouble Apple is having in China. Sales in the Greater China region were down in the latest quarter to 20.8 billion, down from 23.9 billion, while total net sales were up to 119.5 billion from 117.1 billion. So overall, the company's sales were growing, while sales in China specifically were declining. And the geopolitical tension has been strong. And this is a big category for Apple. Not only does it generate 21 billion in sales, so roughly 20% of its sales, but Apple also has its manufacturing footprint concentrated in the Greater China region. So if these geopolitical tensions continue to boil, it's really bad news for Apple. So some headwinds here from Apple, otherwise an excellent performing company, facing some headwinds here because of the geopolitical tension, because of lack of innovation in the iPhone, is really pushing the stock price. And surprisingly, it's not down all that much. Apple trading at a forward price to earnings of 24. It's down from a forward price to earnings of 30 it was trading. So it's accounted for some of these headwinds already in the valuation. But I don't feel that these latest shipment numbers are accounted for. I wouldn't be surprised if over the next few days, Apple's stock price faces continued downside pressure. So keep an eye out for that if you're thinking about Apple here. Might be a buying opportunity if you're looking at Apple longer term for the next 5, 10, 20 years. This might be a buying opportunity if you're confident in Apple's ability to innovate, if you're confident that the increasing capabilities from artificial intelligence could make the iPhone more attractive. I would lean towards that. I would lean towards that because Apple has demonstrated the capability to innovate. And this might be an opportunity for investors to get in here at a time when Apple's valuation is coming down due to these headwinds, but longer term, its prospects remain excellent. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.